Welcome to Early Edge Club. We are a small cohort of serious microcap investors. Every month, we deep dive into two microcap stock chosen by the community. We are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. Today's section is divided into understanding first the business model, the industry, and then we use our 20 factor scoring, and finally our take on valuations and risk. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
Today's company is Worth Peripherals Ltd. So the company was incorporated in 1996 and it is in the business of manufacturing various type of corrugated boxes. Basically, this type of boxes. In addition to this, the company has also planned to enter into baby and adult hygiene business through their wholly owned subsidiary Worth Wellness. This is something which I'll come onto later. So these are some of the products which they manufacture. Moving forward to management overview, so Raminder Singh Chadda, who is the chairman and MD, bachelor's degree in science, and he has joined the company in 2010. So he has been with the company since last 15 years, and he basically handles all the decisions and is responsible for entire business operations of our company. Mrs. Amarveer Kaur Chadda, she is the wife of Raminder Singh Chadda. She has a bachelor's and master's in arts as well as bachelor's in law honors. She has joined the company in 2004 before Raminder Singh, and she has more than 17 years of experience in the HR department. Next, Mr. Jaiveer Chadda, who is the son of Raminder Singh Chadda and Mrs. Amarveer Chadda. He holds a bachelor's degree in engineering and master's degree in electrical engineering. He joined the company in 2017 and he currently is a part of a team that oversees IT, marketing and R&D of our company. So the main promoters have been with the company since a very long time. Mr. Javeer has joined recently only, but although he doesn't hold any significant position as of now. So moving forward to industry overview. So as you can see, India's corrugated boxes market as per 2024 stands at $7.8 billion and it is expected to reach $18 billion by 2023. So it is very high growth market, 9.6% CAGR. If we see by segmentation, so food products and beverages, basically FMCG companies like Amazon is there, and other e-commerce companies are there. Most of the corrugated boxes are used in this, and other segments are also there. So the main key drivers for this industry is the rapid growth of e-commerce, demand for cost-effective, durable packaging, expansion in organized retail, which is happening in India, and the need for efficient supply chain management are some of the factors which are driving the growth. Also, in addition to this, there are sustainability initiatives and government regulations on eco-friendly packaging, which are further enhancing the demand. So key takeaways, what is happening in this industry is major paper manufacturers are entering the corrugation space. So what is happening, because there are a lot of paper companies, they are entering in this market. Corrugated manufacturing companies, corrugated boxes manufacturer in our country, they're also doing capex and they're also being adding a lot of capacity. So what is happening between these two? A competition is increasing very fast. Oh, so it is a big problem because ultimately, what is it? It is paper only, paper boxes only. So it is a big problem here. But and the next takeaway is that we are one of the largest manufacturers of corrugated boxes in our country. And we have a well-established relationship with all the companies. Basically, we have been with with a lot of companies since a very long time, mostly FMCG companies. So we have long-standing relationship with them. So next, which the company is doing, as per their website, they are adding value by printing high quality graphics on those boxes for more advertising. So this is what I'm talking about, this advert graphics. So this is also not a very big differentiator, but that is one thing which they are doing. Next, Worth Wellness, a company that which is a subsidiary, and Through this, we are entering into baby and adult hygiene industries, basically diapers. Diapers is one product which I found mentioned in their annual report of some years back. So our company has started acquiring this Worth Wellness from FY21, and it is now that we are doing proper capex and proper focus on it. So the project cost is estimated to be 125 crores, for which they have also applied for a term loan of 45 crores, and 50 crores are given by our company. So this is a very big loan which we are giving, but it is a subsidiary, but still the amount is very big, and it is a business which is completely unrelated to what we are doing. Moving forward, bull case. So, as I mentioned, we are one of the leading manufacturers of corrugated boxes, due to which our company enjoys long-standing relationship with majority of our clients. So, this provides a degree of visibility and stability in future revenues. Secondly, strong industry tailwinds are there. It is one of the very good growing industries. So it will further enhance company's growth prospects. Next, if we are successfully able to execute the wellness vertical, which is something which is a business very different from what we are doing right now. So bull case is, as I mentioned earlier, we are one of the leading manufacturers of corrugated boxes, due to which our company enjoys long-standing relationship with majority of our clients, which earlier were FMCGs only, but we have improved our client base. So this provides a degree of visibility and scalability for future revenues. Next, strong industry tailwinds are there. As we saw in the industry overview, we are into one of the very good industries which are growing at a good CAGR of close to 10%. This will further enhance the company's growth prospects. Next, successful execution of the wellness vertical, which is something which is a very different business from what we are currently doing. If we are able to successfully execute it, then it will unlock a significant new revenue stream, potentially becoming one of the key pillars of our business. Moving forward to bear case, so corrugated boxes are mainly used in the packaging industry, mainly in FMCG. So any slowdown in this sector, in FMCG or e-commerce or any such sector, will affect our company. Secondly, the most important factor here is craft paper, which is a raw material. Its prices are a bit volatile. So if you see the chart here, between FY21, FY22, FY23. So as you can see, the volatility here of the prices of craft pulp, which is our raw material. Now, if you correlate this in FY22 and FY21 and FY23, if we see our margins took a hit. And why that happened? It happened because of the fluctuation in the price. So this is one of the very big factors. This fluctuation in craft pulp, which is our raw material, prices of this are very volatile, and due to this volatility, our margins get affected. So it is one of the big factors. So when this, if we see on a technical basis, then it is around a support level. If it goes up once again, then it will hit our margins once again. So that is another factor. Next factor is alternatives of corrugated boxes would be a threat. But what considering that corrugated boxes are considered biodegradable and safe for environment, this offsets some of the risk. But there are still risks of new alternatives that can come up. Moving forward to our framework, section one. So if we see fundraise history, so fresh issue was there. They had raised 18 crores in September 2017, out of which 6 crores were used for working capital, around 5 crores were used for capex, 3 crores were used for repayment of borrowings, rest were used for general corporate purposes. Due to that reason, because it is more inclined towards working capital, I gave 3 on 5 score. Director and promoter track record. So directors are very good. Their track record is clean. So I gave 5 and 5 score. Related party transaction. So related party transaction, especially to our new wholly owned subsidiary. But apart from that, 86 lakhs interest was received from Yash Packers. So Yash Packers is a company partnership firm basically, and our company is a partner in it. It is a joint venture. Next, 55 lakhs of goods were sold to the same company. Then 1.1 crores in freight and carriages were paid to Versatile Translate Private Limited. This is a company where directors are. It is not our own. It is not our own company. And next, Our wholly owned subsidiary, we had given a 50 crores unsecured intercorporate loan, and it was at RBI's yield rates for a period of 3 years, which can be extended. So this amount was very big. Due to that reason, I gave a 0 and 5 score. Board composition, if we see, so number of directors are six, out of which three are independent, three are directors on board. So I gave 5 and 5 score. I found it there was no problem in it. Remuneration, if we say, it is in our limits, and the whole time director salary is the sum of salaries of both the whole time directors. So I gave 5 and 5 score. Moving forward to key person resignation, so there were few resignations. So company secretary resigned in 2019, non-executive independent director resigned, but it was a genuine reason due to his health issues in 2021. Then CFO had resigned in 2022. Company secretary again resigned in 2023, and again one more CFO had resigned in February 2025. And due to this multiple resignation, I gave 3 on 5 score. Next, auditor resignation. So, two secretarial auditors had resigned between 2023 and 2024. Apart from that, Messrs. Maheshwari and Gupta were appointed as statutory auditors in July. So, I gave 3 on 5 score for now. Auditor opinion was unmodified. Credit opinion was good. It was actually upgraded from CRISIL A1 to A2 in terms of short term. So I gave 5 and 5 score. There were no regulatory issues, so again 5 and 5 score. So PPT's con calls were not there. Due to that reason, I gave 0 and 5 score in terms of this investor communication metric. Moving forward to section two. Now there is no business concentration risk as of now, so I'll give 5 and 5 score. Revenue growth versus receivables were fine, so I gave 5 and 5 score again. Operating cash flow by EBITDA, it was fine. It has not been negative since a lot of years, but it is a bit low on our metric on our scale, so I gave 3 and 5 score for now. Inventory trends, DSO was fine. Inventory days were fine, but DSO was a bit high on our according to our metrics, so I gave 3 on 5 score for now. Cash conversion cycle has been good, so I gave 5 and 5 score. Moving forward, capex versus revenue was also fine, so I gave 5 and 5 score. Debt and liquidity position both are fine, so I gave 5 and 5 score. ROC and ROE has seen a bit of dip, due to which I gave 3 on 5 score. And if we say revenue growth has been fine. It was negative in FY24, and because the company does not do any con calls or anything, I did not find any concrete reason behind that. And the margins, the dip in margins, as mentioned, dip in margins, the only correlation I found was with the prices of our raw materials. When the prices went up, our margins shrank a bit. So that is the only reason I gave 3 on 5 score here. And after this, from the framework, the total score comes out to be 76. And for the valuation and final take, I'll hand it over to you.
Yeah, multiple resignation from the CFO side, like back to back, and CS. Yeah, but
Hmm.
again, small companies, so attracting good talent is also a problem. But interesting company. One of the suggestions that one of the diversification or the areas they are entering into totally unrelated. So we need to see
Hmm.
monitor how that goes. A lot of capital would be diverted to that business, and also practically it's easy for anyone to enter into this business. So all the paper manufacturing companies are doing forward integration, right? Let's say setting up these corrugated box manufacturing unit. It's so easy for them.
Hmm.
One of the reason why this came into my
Hmm.
radar is again because of the 3-quarter rule. Like last 3 quarters, you see they have been
Hmm.
growing year on year at 15 to 20%. Not sure how much of baby product is contributing to that.
They have not started it. The work is the manufacturing and they are setting it up. It is not
Okay.
started.
So
So,
that is good. Then it's
yeah.
all organic growth. So let's see
Hmm.
like how they execute that. I couldn't find any online presence for their wellness, Worth Wellness, proper one. So
Yeah.
that is also something. Yeah, there is the growth has been on a last 5 years basis very stagnant. So maybe one of the reason why they are entering into a completely different vertical is because of this. There's no growth in the industry. Since there's no management con call or anything, I am not able to give what the best case and the worst case could be. right? Worst case is giving a lesser number, best case is 300. And based on the best case, it is giving a price target of 163. It's trading at 140. So looks like already fully priced in. So the only trigger that I could see is the new baby products or some structural change within the industry. But good cash conversion happening. They have been consistently operating cash flow positive, and the cash conversion cycle is also good within the industry. So those are few positives, but overall is something that is missing. And based on our multiple analysis from microcap companies, we have lots of companies with better scores. So we will focus on them. It would be more for people who already have the stock, get an idea as to what they could do, stock if they hold. And if someone is getting, this could give good insights into into their analysis. I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20-factor scorecard, feel free to share your score and how it compares with ours. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching, and we will see you in the next one. Bye-bye.